Welcome to all of you. This is K Asnani from Smart VRC, and today's topic is promising sectors. We are going to share a lot of insights, and this will be followed by a question answer session where you will get an opportunity to ask any sort of question. Estimated time for this presentation is about 40 to 45 minutes, to be followed by question answer session, and that duration depends on you. So today is a special day of two legends. Mahatma Gandhi ji shares his birthday with Shri Lal Bahadur Shastri, the second Prime Minister of India. There may be many the things which may be forward-looking, and a lot of things maybe there, a lot of stocks may be discussed, but all this should not be construed as a recommendation to buy or sell. It is only from the sharing the insights and from the illustration purpose only. So this is a standard warning. Investment in securities market are subject to market risks. Read all the related documents carefully before investing. These are the important disclosures and disclaimer. Whole objective at Smart VRC is to help investors increase their returns, and that can be via sharing the investment insights or via the recommendations or publishing articles and books. And this theme I have repeated number of times in my past webinars, seminars, and workshops, because this is the gist of our valuation technique. It says that till present, whatever has happened in the company, we call them fundamentals, and that is past. What is of our interest is of future. Of course, past, we can have many insights from the past also, but the future share price in the long term is dependent on the future story. And that is how we are using a ratio known by PEG ratio, which captures the past performance via P ratio and the future through growth. So that is how we use PEG ratio. And we have been using this ratio for more than 25 years. And in course of this long duration, we have aligned it with our Indian stocks. And we have not only aligned it, but we have aligned it successfully, as the share price movements and the recommendations where we have given is an indicative of the same. And here are a few of the stocks wherein we have got exceptionally good success. So starting with this Avantel, the first time we recommended was at rupees 25 on 30th of April 2022. And after about 2.5 years, today it is rupees 182. And in the process, it has multiplied by more than 7 times. And the story was the huge order book and the client. One of its clients is the US-based largest defense company, that is Lockheed Corporation. Of course, the orders provided by the Lockheed are pretty small, and even the size of the company, that Avantel, is small. It has a turnover of about 50 crores per quarter. And very recently, it has backed about 45 crores of order from L&T. So this is all about the Avantel. Next is Keynes. I am sure a lot of people are aware of this company. First time we recommended at rupees 945 on 14th of March 2023. So within a duration of 1.5 years, stock has gone up by 5 to 6 times, more than 5 times. And in between, we have recommended this stock number of times. Also, until also we have recommended number of times, and in our various products, even in webinars also. The next story is Ramakrishna forging, that we were able to capture it pretty early, and about 2.5 years back, we recommended first time at rupees 190, and today it is 1020. 5 bagger plus in just 2.5 years. Then was the HBL, first time recommended 2 years back at rupees 94. Today it is 628. So more than 6 times returns in a matter of 2 years. A lot of acquisitions has been done by this. Oh, sorry, not by HBL. Couple of good acquisitions has been done by HBL, and company is pretty conservative in giving the projections. And this is one of the main suppliers of coverage system for the Indian Railways. A lot of potential is still left, we believe so. But in terms of the performance, financial performance, regarding the share price, yes, we will keep you updated in our subscribed products. Then comes the KEI Industries, which was first recommended at rupees 271 just 4.5 years back. And within 4.5 years, stock is multiplied about 15 times. That is a mega bagger. And the story was very simple at that time because of the low commodity prices we recommended. And the theme of the today's webinar is also more or less the same. We will see how the commodity prices are moving. And this KEI Industries, we have also recommended for smart super growth stocks. And smart super growth stocks is not an independent product. In fact, this product is available to all the subscribers who subscribe to either Smart Gains or Multibet. So in this smart super growth stocks, we recommend stocks which have potential to multiply at least 10 times in coming 10 years. So till date, we have recommended only 3 stocks. All the 3 are doing wonderfully well. So I hope many of you are new to this webinar. And if you want to receive the notifications for such webinars or even for other insights, you send us your name and city to this WhatsApp number. This is our WhatsApp number 9755920780. Because we send our notifications via broadcast technique, and in broadcast, the messages, the notifications are received only if the receiver has saved the sender's number. So we request you to save our number also, that is 9755920780. So to start with, first we will go for sector indices, then market capitalization, then sector specific valuations, and then the question answer session. So first, coming with the sector indices, let me ask you, what is your opinion? Whether I should say what you think of that during the last 1 year, whether I should say from 1st of January this year, which is the best sector? Which sector has performed the best? IT, power, auto, or healthcare? You can write your answers in the chat box. Which sector has performed the best? So power, healthcare. So most of you believe that auto and power have performed the best. Let's see what is the reality. So here is the large number of sectors which have performed, and the best performance is from power, and next is from auto, as has been rightly put in the chat box, mentioned in the chat box. So BSc consumer, discrete goods and services 37%, auto 45%, bank X 11%. Banks have performed miserably, and among the leading banks, I think ICC has performed the best. And this is the stock which we had in SBB. Will come more about SBB coming presentations, coming screens. Then capital goods, consumer durables, fast-moving FMCG 16, finance, like in banks, finance is also not performed well. Information technology 19, metals 28%, oil and gas 36%, power the best 48%, PSU 37%, realty 39%, telecom 36%. So these are not all the sectors, but only selected ones, and most of these sectors have performed well. So overall, as we will see in the coming slides, performance is not as good as being depicted here. So average of these good performing sectors is 32%, while SBP has performed 43%. Once again, SBP. SBP stands for Smart Billionaire Picks, and it is a collection of curated 20 stocks, and I will share more in the coming slides. This has performed 43%. 43% is way better than the average 32%. Not only that, being compared to the best performing sectors like power, healthcare, and auto, performance is way good. Of course, it is lower than the power sector, but we cannot have all the power sector stocks in portfolio. There's a mix of all portfolios, and despite that, it has performed very well. I'm very happy to share with you that we are coming out with an offer. This offer will start from tomorrow, that is 3rd of October, and will last up to 13th of October. And under this offer, we are going to celebrate, it is a celebration with the Navratri. And subscribe to any of our product for any duration, you will get 9 weeks extra subscription free. 9 weeks means about 2 months and a week. And this free subscription is not indicated on the subscription page, but this will be provided from the backend. And also, we have decided to offer one free book, and this book will be different on different days. This will be intimated to you via the notification. And this book will be, these are the books authored by well-known investors who have created good money for themselves or for others, like Peter Lynch, Paul Marx, etc. So coming to the next is market capitalization. Let's see what is your view regarding the market capitalization. Which index has performed the least during the last 1 year? Which index has performed the least? Means lowest best performing index. Or I'm not asking for the best performance, but index which not perform the best amounts. Please write your answer in the chat box. Is large cap, large cap, large cap, large cap. Okay, everything is going with large cap. Okay. Oh. Only one person has written as small cap, but no, mid cap has also come. But more than 90% response is for the large cap. So large cap has not performed well. Okay. And I'm very sorry to say that none of them has indicated the right answer. So the right answer is BSc Sensex, BSE Sensex has returned only 16.60% returns compared to 34% returns by small cap as well as mid cap and 21% returns by large cap. So here is the chart, and the source of this chart is Google Finance. Okay, SBPS performed is way better than in the Sensex or small cap, mid cap, or large cap. So it is a mix of large, mid, and small cap, but still performance is way better than all these indices. Coming to the sector specific valuations, we are taking a small pause. I am going to share with you my firm, Smart VRC. So our philosophy is first the story. Story is everything because we believe in medium to long term investment, and in medium to long term, it is the earnings of the company which decides the share price majorly, and is aligned with the less aligned with the market. A market is your friend, so we should not be scary of the market, whether it goes up or down. Right? When the market goes down, it gives you an opportunity to buy the stocks, not necessarily every time. And when it goes up, then it gives you an opportunity to exit from the overvalued stocks. Yes, assessment is very much required. How you will decide when to exit and when to enter. So that has to be taken care by some technique of valuation. We use PEG ratio, and be always rational, be always logic driven, and then you have to give some time to make some good returns. So that is our philosophy, SMART, SMART. We have got basically two products, Smart Gains and Smart Multibagger. So Smart Gains was started on 30th of December 1999. Multibagger in 2007. Here the frequency is Wednesday. Every Wednesday we recommend one stock in Smart Gains. Target compound returns are 25 to 30%. Holding period is 3 to 24 months, but often it is 9 months to 12 months. And risk here it is medium. Sell recommendation, yes. Allocation recommendation, yes. That is how you decide whether to invest in a particular stock. This for Smart Gains. Coming to Multibagger, it's a monthly recommendation. So we recommend 12 stocks right here. Target compound returns are 30 to 40%. Holding period is 2 to 5 years. Often it is 3 to 4 years. Here the risk is low, bit low, medium, because we are going for a bit longer duration of 2 to 5 years. A sell recommendation, yes. Also, we give you the allocation recommendation here also. Continuing with it, the philosophy is same, bottoms up. So we are majorly focused on the company fundamentals, and then the sector, and then the corporate as a whole, economy as a whole. All caps, yes. All market capitalization, we are not constrained. We are not limited by the market capitalization of the company. We are focusing on the company's future performance, of course, with good liquidity. Recommendation time during market hours only. So only in real time we recommend the stocks. And with every recommendation, we provide research report, and research report is available on the website, and soon it will be available on app also. Access to past stocks, yes. As soon as you subscribe, so at the time of subscription, you will be asked to set your own password. Once the payment is through, you will be able to log into your dashboard area. Once you log in, you get an access to our past minimum 2 years of recommendations in Smart Gains, and for 5 years in Multibagger. Subscription price for 1 year, including GST, is 9,900 for Smart Gains for 1 year, and in Multibagger, 11,900. And note, there is no common stocks between Smart Gains and Multibagger. So here is the performance of Smart Gains from 2020 to 2023. You can see the various parameters. What we have mentioned here is success ratio, then return on investment in Smart Gains, and return on investment in BSE sensitive index. For each of the 4 years, we have done exceedingly well, whether on standalone basis or when you compare with the BSE sensitive index. And same holds good for smart multi-bagger. In fact, the performance is much better in multi-bagger. And we are helping investors not only via the stock recommendations, but we have lots of other activities which help investors get better wealth in long. So these are through websites. Through website, we have a lot of lot of articles of blogs there, podcasts are there. Then we have a mobile app, webinars like the present one, through the free seminars. Then we have some paid workshops also. From a long time, we have not spent any workshop, but soon we are planning for the same, and maybe in 2024 itself. And that is going to be a very intensive type of workshop of 8 days. Those who are interested can contact us, and also we will notify you. Then comes the publication, blogs, television, social media. So if you are interested in watching the past webinars, you can go to our website smartvrc.com, and here under the knowledge center you can click webinars, and then you can select. If you visit our website, you will find a book, Way to Billionaire. And this is authored by me, K Asnani. This book is available in English as well as Gujarati. And I'm happy to share with you that the second book is also under publication, and maybe before December, you will be able to come out with this book. And this is going to be a very different kind of book from this Way to Billionaire. How we are different? We are truly qualified in terms of academics as well as the experience. I have been investing since 1989, and the great thing is we are able to find the worth of the stock with good accuracy. That is the ultimate thing. So that removes many hurdles from creating wealth, be it the patience, be it the perseverance, be it the long-term compounding effect, and also mainly the emotions. And we are readily available and approachable all time. Here is SBP, as I was referring in my earlier slides. The SBP is a curated basket of 20 stocks, which we started on 30th of May 2001. And as on 1st of October 2024, this is the performance. This blue one is the Smart Billionaire Picks, and this red one is the BSE Sensitive Index during the same period. As you can see, an investment of 1 lakh on 30th of May 2001 has grown to, is very close to 3.16 crores. And similar investment made in BSE Sensitive Index would have returned you about 22 lakhs. That is a very good performance. And that too in a 32, 33 years. And also, our journey is to reach to 100 crores. So if we go like this in this whole period, it's about 27-28% CAGR, then hopefully in the next 15 years, we will be there at 100 crores. Yes. This is another way of judging our performance. The same period, we are not only better in terms of basis index or 50/50, but if you compare to the other country indices, then performance is just superb. This is the data. SBP has grown at a CAGR of 38% and Sensex at 14% during the same period. This is a feedback from our very, very old subscriber. He is from Mr. Onil A. Lauriwala. I distinctly remember that value of Smart Billionaire Picks had gone below rupees 4.5 lakhs in 2008-9, and today it's over 3 crores. So that is roughly an appreciation of around 70 times from 4.5 lakhs. That's simply terrific, and unbelievable, super duper, mind-blowing, uh, mind-blowing feat, and I don't have exact words to appreciate your greatness, masteries. By lots of love and salutes to you. That is the kind of relationship we enjoy with our subscribers. Thank you, Mr. Onil. Thank you very much. And I feel very happy and satisfied with such kind of acts. Oh, you may be wondering that how SVP has delivered such returns. So it is nothing but how we assign the weightage to individual stocks, how we keep the total basket diversified, and not only in terms of the market cap, but also in terms of the number of stocks, the number of sectors, the number of business groups. So there are 20 very exciting stories, and it is a combination of these stories, and the average weightage is 5% of the stocks. We make amendments only on Wednesday. Amendments are made on an average once in a month. Vision is, of course, long term. So these are the year-to-day returns for SVP. As I mentioned in my previous screen, that SVP has delivered 43% returns this year-to-date. And the main contributors are these 7 stocks. W have been BATech, sorry. So it has gained 140%. Keynes has given 105%. Indacop 59%. 8% by Mrs. Lecture Food. Gained 60% by R. So these are the stocks with due weightage which have this SVP. And every time you will find 5-6 stocks which are outperforming the market way by wide margins, and this is the reason for the spread. So that was all about smart VRC. Now coming to the sector-specific valuations. Before that, I would like to share with you the commodity prices, how they have moved during last 1 year. And as you can see, case of steel, it was 4,000 November, December last year, and today it is 400. And this last spike, what you are saying, is because of the stimulus package decided given by the Chinese government. So coming to the last quarter's performance, last quarter means quarter ended 30th of September, we'll find that the raw material prices have declined, continued to decline. So that benefit should go to the companies. And of course, companies would have reduced the prices also for their final product. And a lot depends how company has acquired the inventories at what time. Company which acquired the inventory at this point of time would be a key beneficiary rather than the company which acquired here. So it all depends on that part also. At the same time, falling steel prices means not good for the steel producing companies. That is truly reflected in the performance, financial performance of the steel companies, Tata Steel or Jindal Steel. Then comes the iron ore prices. Yeah, almost a similar type of rate as compared to the steel industry. Coming to the copper, yes, copper was touching way higher till the May-June period this year, but then it fell about 30%. But still, is not low. Aluminum, almost on a similar pattern as compared to copper. This is the soda ash. Soda ash, as you can see, it is consistently under decline at 3,000 plus levels. Has fallen to around 1,700 tons. This for this the currency is Chinese yuan per ton. That is a significant decline. So the companies which are producing soda ash is not a good indicator for the coming performance. But the companies which are using soda ash, big plus for. Now, this is a kind of a general commodity index for chemicals and allied products. So it includes chlorine, sodium hydroxide, and other alkalis. Sodium hydroxide means caustic soda. So here also you will find that there is a good decline, but decline is not as steep as case of soda ash. Coming to the current valuations, this is purely our opinion, Smart VRC's opinion, and this has nothing to do with any recommendation. We are not giving any recommendation. This is just our opinion. You can use your tools, your due diligence, and any stock specific. So auto and related, we find it high. Specifically in four-wheelers, there is a lot of inventory built up, and this is truly indicated by the kind of the discounts these car makers give. For exports also, yes, the valuations are very high. And recently, a couple of big car manufacturers have OEMs have indicated that the going is not good. Aerochemical, it is moderate. Moderate means neither too high nor too low. Banks, it is moderate. In fact, a couple of banks gives good opportunity for long-term investment. Cables, it is moderate. As we have seen, the raw material for cable is aluminum, copper, steel, PVC, and a couple of these raw material prices are pretty down, and a couple are at almost the same levels. So for cable, it offers a good opportunity to invest for medium to long. Also, the demand is good, specifically in power sector. Then comes the cement. Cement, it is kind of a neutral. Chemicals, it is neutral. Construction, neutral. Defense, moderate. Moderate because the long-term potential is very good, but at the same time, P ratios are sky high, and they are trying to discount 2 years, 3 years, or 4 years, hence the performance. So have patience, and I'm very sure you will get an opportunity at lower valuations. FMCG usually, as usual, it is high. Pulse is high. IT sector, it is moderate, but I'm not very bullish on IT, though the valuations are moderate because of the AI. Infrastructure and power, yes, again, valuations are very high. Prospects are also very high. Good. Metals valuations are high, and in our opinion, one should avoid. NBFC, packaging, paint, moderate. Because of the low crude oil prices, paints may do well, but already the leading paint companies are quoting at high P ratios. Paper valuations are high. One should avoid. Pharma, real estate, moderate. Sugar is high. Technology is moderate. This was all about the sector-specific opinion. Coming to the smart world, nobody can predict interest rates, the future direction of the economy or stock market. Dismiss all such forecasts and concentrate on what's happening to the companies you are investing. That is what we do. We are very much focused on the companies where we are investing. That is the importance of approach. This has been nobody but Mr. Peter Lynch. He's a great party. He's a master. Follow gentlemen. Once again, I request who are new to this group, may please join our smart club. So they may send their name and city to this WhatsApp number and save this WhatsApp number in your mobile contact. Coming to the last part of this webinar, there is a question answer session. So if you have any questions, you can write your question in the chat box and your name, or you can also raise your hand via reaction box. We'll unmute you one by one. Thank you. So any query? Do you think the current geopolitical situation can impact our markets in a big way? As of now, the geopolitical tension is restricted to a certain groups only. But if it clicks, then definitely it can have an impact. But nevertheless, India is doing exceptionally well compared to the other economies of its size at global level. So even if there is an impact, we will continue to do well. I That is my opinion. Can we buy now also a stock recommendation in SP? So it is like this, Mr. Bhushan Miller. That is your query. If we are holding any stock, I mean to say, if we have a hold recommendation in any stock, in our recommendations, that means we are ready to buy at that price. It's as simple as that. So if you ask me to sell all stocks to exit, make an exit from all the stocks in SBB, and tomorrow you ask me to buy fresh stocks, you give me an opportunity to buy any stocks. I am going to buy the very same stocks in the very same proportion. Is I hope I've given you the answer. Any recommendations? We give recommendations only to our subscribers, and we do analyze the stocks in webinars. So we request you to follow the notifications. So stocks are falling. Should we hold on to them? So it is like this. In the short term, stock price is very much aligned with the market. If the market falls by 2,000 points, then definitely there is a very good probability that all the stocks in our portfolio will fall. But in the long term, the association with the short term impact is reduces, and it is more aligned with the company's earnings per share. So that is how that is the principle on which we recommend the stocks. Which is more important, ROE or EPS? So ROE, again, ROE in itself does not indicate much. It is the trend in ROE that matters. And if the ROE is very high, then definitely company is good. But if there is a trend of rising ROE, then it is the best. And everything is captured by EPS. So that is why we are not mentioning about this parameter ROE, but we are focusing on EPS growth because that captures it. What are your views on data center theme? Is it overvalued already or thinking long term? There is a lot of potential still left. So data center construction is a very simple type of construction. There is not much technology, not very high level of knowledge or technology is involved. But as I will compare with EV charging station. So EV charging station is a kind of a construction only. It does not require technology. So, but because just for the first time in our country, the EVs have come. So, many investors think that this XYZ company will get an opportunity to build so many EV chargers across the country. So, it is nothing great. Sooner or later, many large and small companies will enter into the fray and margins will decline. Same holds good for data center. Have Jindal Stainless at 54, which is 700 plus. Continue holding it as India's infra growth story is still doing strong. So that also depends on the weightage you have assigned to your portfolio. It does not matter at what price you have purchased. What matters is how high and how fast it can go. So that is the crux. why various equity mutual fund schemes are coming up with IPOs when the share price are at high level. See, it is the individual retail investor which decides the new fund offerings by equity mutual funds. If investors are ready to give money to the mutual fund owners or the companies, they will come out. Means what is the demand? It is like if there is a demand for a certain product, then Amazon will introduce that kind of product. The other companies will come to Amazon, they will put those type of products in the market. It is the demand only from the investors which is creating IPOs, be it from the companies, be it in SME, be it from corporates. Okay. Surprising to see you in red shirt instead of stunning white. Okay. That is just a change. Can you share one stock for future growth? So, Mr. Amonte, I believe you are or you are our subscriber. So you know very well we don't recommend stocks in public, and also even if I recommend, then how you will come to know when to exit? Which sector going to outperform next 1 year? So we are not very sector specific. We are very company specific. There are companies, a lot of upside potential, as I said, in power, infrastructure, construction, and also in FMCG sector also. That is a very rare. And normally we avoid recommending FMCG companies because of high valuations, but this time we have already two stocks in our SBP. Where do you see Nifty after 10 years? So it is very simple to answer. Uh, During last more than 40 years, PHE sensitive index has delivered 15% compound returns. So with that logic, PSE Sensex or Nifty 50 should multiply 4 times from the current levels. So in 10 years. So after 10 years, Nifty may be around 1 lakh and the BSE sensitive index may be around 3.5 lakhs. Yes, this may seem to be um, highly impossible considering that today the Sensex is only at about 83,000. Multiply by 4 times. This has happened in the past, and I'm very sure the kind of growth our country is witnessing, this should continue. Valuations of renewable energy sector, low, moderate, or high. I would keep it in moderate category. Some of the stocks in the SBP had priced from recommended price 20 to 50%. I have already answered this query. The V Smart VRC have two products, gains and multiplier, and complementary to gains is SBP. Yes. So basically, we have three places where we can put our capital. Out of all this, what the order of investment one can go for? Beginner. Before taking this question, I am interested to know this. Okay. So basically, we have four products. Let me tell you. One is smart gains. The other is smart multiplier. Whether you subscribe to smart gains or smart multiplier, you will get one more product that is smart super growth stocks, where we recommend, say, average one stock in a year, but that is for very long. Again, we have one more product with the name of SBP, and that is given to the subscribers of smart gains. So as a beginner, my recommendation would be to go with either smart gains or multiplier, depending on whether you want to invest for duration of a year or you want to invest for more than 2 years. If you want to invest for more than 2 years, go for smart multiplier. If you want to invest for about a year, then go for smart gains. Another factor which can decide your product selection is the frequency. Smart gains, every week you will get one recommendation. In multiplier, you will get every month one recommendation. So these are the things, and like to share with all of you that about 72% of our subscribers are subscribed to both the products, Smart Gains as well as Multiple. And majority of them subscribe to Smart Gains first, and then they add Smart. I hope I have given you the answer. How about your view on steel and copper as of now? As you have said, China has given stimulus. So we are basically predicting the commodity sector is very, very difficult, and we are not into it. And as I said, no one knew that China is going to come out with such a big stimulus package. Even no one knows that how much it will be successful. So predicting the commodity cycle is, I would say, it is not our cup of. Momentum in stock, in defensive stocks, will it continue? Yeah, if a company has good order, then momentum is going to continue. So keep tracking the order book. That is the simplest way. Of AI in predicting share market prices. So when about 5 years, 7 years back, I attended one conference in Mumbai, and there everyone was bothered or worried about algos. Now the algos have come, and to be honest, algos has helped us to get more returns because we are not using algo. Those you are using algo, they keep the market highly volatile, and that gives us an opportunity to buy low and sell high. I hope you got my point. So don't worry about the AI also. No one can predict the share market. That is taken for granted. You can be sure AI is not going to predict the share market. No one can predict that what Elon will do. Okay. It is like this. Another factor is the interest rate. From last 1.5 years, we are watching, we are reading that US is going to reduce the interest rate, and it happened after 1.5 years. Not only that, people were expecting 25 basis point cut in interest rate, but actually it came out to be 50. There are not many ifs and buts and things keep on going. Don't try to predict the market, rather take advantage of the volatility. Which shares sectors are on your radar? So we don't keep any sectors on radar. Definitely, there are about 140 shares in our watch list, which we keep on watching. And whenever the share price goes below the intrinsic worth, we recommend towards subscribers based on the scheme. Whether we have a vision for 2 years, 3 years, or 4 years, then we go for multiplier. If we have vision for coming 6 months or 12 months, then we go for smart bets. Should we exit from all auto sector stocks as valuations are high? So that depends on which stock you have, and also that depends on the weightage you have got on that stock and sector. Sandana Spurti and Avalon Tech Theory. Mr. Vijayji, you are already, I believe, you are a subscriber to our products, and we have already given our recommendation to these. Recommendation does not mean that buy every time or sell. So I hope you can refer back and you can look for what was our recommendation. That is a very good question. In SBP, any reason why we are moving towards maintaining uniform 5% weightage for all stocks instead of deciding weightage based on risk and reward? We are in SBP, we are maintaining the weightage based on the sectors, and of course, there is still a variation. We have left a leeway. We are not exactly 5% weightage with every stock. It varies from 4% to 6%. That leeway we have reduced. Earlier it was from 3% to 8%, that we have reduced to 4%. What is your view on Ola? So we have stopped giving recommendations on IPOs. There are many reasons for that. Almost being the promoter, the owner in case of IPOs. Owner knows everything, while the investors know very less, because pre-listing there are less regulations, while post-listing there are many regulations, and also the most of the management changes I've observed post-listing. Their stances change, maybe because of the ownership pattern, and that is why we don't recommend stocks in IPO. How risky it is to invest in unlisted companies other than liquidity? Is it worth the risk? Yeah, it is very risky because you never know when the stock will be listed. Also, the liquidity, as you have mentioned, and also, as I said, we don't have much documents to arrive at a fair value. IT sector upcoming year view. I don't think IT is going to be a star performer as it has been in the past, and more so because of the AI. Things are changing very, very fast. And recently, I came across an article where a leading personality, uh, he is 60 plus, he said that 80% of the jobs from 80% of the sectors will go away in the coming 10 years in AI because of the AI. So you can just believe, means you can just think of what is going to happen. And similar kind of views have been shared by the leading personalities in the AI sector. Healthcare sector, Max Healthcare has moved gained number one position in it. Yeah, moving to number one position has hardly any meaning for us. What we are bothered is the future earnings per share growth. Thanks for the nice presentation. Thanks, Mukeshji. Thanks, Bhushanji. Thanks for your advice. I am subscriber for last 3 years and making thanks. So, questions, probably because we are meeting after a long time. I will be happy to share to reply to most of the stock specific. I may skip, but the rest of the questions, yes, I am going to reply for you. I am new subscriber, as I understand. SVP is the portfolio of some stocks, but today I want portfolio for. So it is just a curated list of a basket of stocks of 20. You can replica based on your investment amount. So that present value of SVP is 3.15 CR. And if you are starting with, say, 31 lakhs, then you can divide the quantity by 10 and so on and so forth. So when can we enter in SVP? Timing is something which I cannot help you out. What I can best suggest you is to invest in 2 or 3 phases so that the ups and downs cancel out. Can you please guide me on my portfolio shares? Yeah, Dinesh, I believe yes, you are our subscriber. You can send me on WhatsApp, preferably in Excel. highlight on recently bonus declare 5:1 Shakti pump is good for company. So declaring bonus or split has no financial impact on the company's performance. It's merely accounting practice. So that has very less meaning. Probably if a company is coming out regularly with bonus shares, then yes, it is not good. So the intentions of the company, I can question if the company regularly comes with bonus. Usually, if the company is not declaring dividend and giving you only bonus, then we should avoid such companies. But Shakti Pumps is, I believe, it is a regular dividend paying company. At this moment, I am not in a position to tell you what to do. But of course, that has nothing to do with bonus. What happens is if the share price is high and if company comes out with a liberal bonus or a stock split, the share price reduces post bonus or post split, and at reduced price, there are more number of investors who are ready to invest. So there is a general tendency among the investors. If I recommend a stock at rupees 1,000, he may not invest. But if I recommend the same stock post split at rupees 100, then he is ready to invest. Of course, fundamentals remain the same, future remains the same. But because of more interest at low prices, the share price increases. And that is the only advantage I see liberal bonus and spreads. Thank you for answering my question. Have been happy subscriber for yes, no. Thank you, Krishna. There are many mutual fund and big houses are using AI computers for trading stock or it will impact. I have answered this. I hope was to your expectations. Yes. It is now more than 4 years of association with you, Asnani sir. It is very exciting journey. Your research, analysis, and recommendations are just amazing. We are with you for 100 crores. Thank you, Jayesh. Yes, we will reach 100 crores. Yes, I am subscriber for last 20 years. Okay, Rajesh Chokamji. As I followed your information now, I have become financially free and have quit my job from. Oh, that is great. That is wonderful. I have quit my job from PSU. That is good, Rajesh. I am very, very happy. And uh, thank you very much for being associated with us. Quitting a job based on stock market investor and investment that too with from PSU is a very, very challenging task as I myself has quit PHL after being into it for so long period. And thank you for sharing, Rajesh. That is a good feedback. So that is all from the chat box. If you have anyone want to speak, you can use the reaction box to raise your hand. Oh, that is all. Shall we end? Thank you for sparing your valuable time. And okay, Saurabh Verma. Yes, Saurabh, kindly unmute yourself.
Yeah, good afternoon, sir.
Good afternoon.
Yes, sir. First of all, I want to thank you. I have been subscriber for your both Smart Gain and Smart Multivagger.
Okay.
And it's years now. And I'm greatly benefited from your recommendations. And mainly the way you have managed this SBB portfolio.
Mm-hmm. Thank you, Saurabh. Thank you for sharing in the open forum. And I appreciate your response and would like to know if you want anything from us in terms of better recommendations, better app, anything. Okay. Mr. Rishit Potlaji, kindly unmute yourself. Yeah.
Yeah, hi sir. It's the first time I'm in the webinar with you,
Okay.
so good to meet you, sir. And
Thank you for joining. How did you come to know about this webinar?
So I bought your book on 2 weeks back. I'm about to complete it. Like I'm on 160th page. So I received this webinar via WhatsApp and joined here. So I gone through the website and seen the smart gains and multibaggers as well. And I'm very interested on SPP, but the portfolio size currently is on 3 lakh 15, like a 3.15 crore.
Yes,
So
yes.
what I thought was to invest at least 1% so that I can manage the similar, like if you are investing in 100 stocks, I can take at least one. Likewise, I was planning. So, but for the portfolio size, it was like a 3 lakhs 15,000, right, for 1%. So how could I go through, like after going through gains and multibaggers, can I take it, or else first I should concentrate on SBP?
So if you uh, try to build your basket of stocks with a amount of say rupees 3 lakh, what will happen is 1% of 3.15 crores. So if suppose there is a stock with a whose current price is about 7,000 or 8,000 rupees, you won't be able to accommodate that stock in your portfolio based on the weightage. So I would recommend that should be at least 2%. It's at 30,000 rupees, then it would be better. Also, you can do one thing. You can invest in smart gains and multibaggers, and over a period of time, when you build up that corpus, then you can start SBP. That is my suggestion to you.
Yeah, yes, sir. And also, I thought it was growing very fast. Like I seen it around 279 a month back, and I seen around 40,000 increment in a month. So, am I doing late or something else? I thought of thought of checking with you.
Even to be very honest, I would also like to share with all of you that even at times I am also surprised that how SBP is performing so well. So that is even a surprise for me also many a times, and it gives us a great challenge that we have to continue this over performance with respect to the market. So that keeps us on toes. Anything else you would like to know?
No, sir. So, as per your session, I will go with smart gains, and then after multibaggers. Then, in the meantime, I will build the corpus and go with SPP.
Yeah. Okay.
Sir.
Thank you. Thank you,
Thank
Rishi.
you, sir. And if
Kindly unmute yourself again. Rishit?
yes,
Yeah.
sir.
You're
If you
telling
take
something?
both the gains and
Multibagger.
multibaggers, yes,
Yeah,
yes,
you can.
yes, sir.
Yes. And take advantage of the forthcoming offer, and that would be helpful to you.
Yes, sir.
We are
Thank
going
you.
to come out with very good books authored by renowned authors.
Yeah, I'm eagerly waiting for the December to check the second book from you, sir. Like the
Okay.
Way to Billionaire was very good.
Okay.
It is making me a good confidence.
Okay.
Actually,
Okay.
building up the confidence from the book.
Mhm.
Yeah, that's all, sir.
Okay.
Thank you very much, sir.
Thanks. Thanks. Yeah, Mr. Nalluri, kindly unmute yourself. Yeah, Jayesh, kindly unmute yourself.
Hello, sir.
Sir, good
Yes.
afternoon. Sir, just wanted to say to you that 4 year journey was very good, or
Mhm.
I have gained that confidence that I could leave my job, and I am
Okay.
no more interested in doing the job. So I feel that I am self-reliant, and I have that confidence now. The job is no more needed, and
Mhm.
this confidence I got from you, and after
Mhm.
your association with you from last 4 years. And very much thanks to you, sir, and your research and the whatever good job you do, sir. I
Mhm.
fully admire like your approach and your way you see the market, and the way you motivate your subscriber to remain intact and to remain confident even in ups and downs, booms and booms. So so many things learned from you, and I have the CD, your Millionaire Book CD. Whenever I drive, I listen to that CD. I don't listen to music. I listen to your CD, your book voice CD. And now I'm eagerly waiting for your next book. Thank you, sir, and great, sir. Very, very happy that you're doing noble service, sir. This much I can say. Thank you.
Thanks, Jayesh, for sharing your outcome of investment in stocks, and I'm very happy that you are pursuing your passion. So that is the best one can have. After achieving financial freedom, one should pursue their passion and to make this world a much better place. That is what I can say. Thank you once again. Thanks.
Thank you, sir. Thank you.
From year 2020 till date, SVP has become son. Yes. I think it was around 45 lakhs, if I am not wrong. And now it is 5 CR. I have a portfolio of 12 lakhs in shares, 3 lakhs in mutual funds. Which one should I join and when? Can I chat online or speak? Yeah, Dineshji, I will. You can call me. I hope you have my number. And what is SBP? SBP is Smart Billionaire Picks. This was a basket of 20 stocks which was started in the year 2021 on 31st of, I think 30th of May. Sorry, not 2021. It was 2001. And it was started with assuming that one has 1 lakh rupees, and today that has grown to 3.15 CR, and we keep on changing the stocks, but the changes, if any, are made only on Wednesday. And today the total corpus, that is a assumption of it, has grown to 3.15 CR. That gives compound returns of 28% compared to 14% CAGR returned by BSE sensitive index during this. For multi-bagger subscription, also please allow access to SVP if possible. So that is not possible, sir, because we are following this trend since start. Since start, SVP is associated with smart gains. So as far as when to call you, you can call anytime. I would prefer during the market hours. If you call me, that would be better, because I'm free during the market hours. My job is not to sit in front of screen to watch the share prices. My job is to find what the companies are doing. So I am more free during the market hours than during the off market. Ashish Jain, kindly unmute yourself.
Sir, good morning.
Very good morning, Ashish.
सर मेरा एक क्वेश्चन था सर, डाउट है मींस
हाँ,
जो सर ये पिक ऑफ द वीक जो आती है सर, इसमें आप जो लिखते हैं कि इतना मतलब इसका पोर्टफोलियो का वेटेज इतना परसेंट रखना है, ये कौन से पोर्टफोलियो की बात हो रही होती है सर? बेसिकली ये जो हमारा जो मतलब ये स्मार्ट बिलियनरी वाला जो पोर्टफोलियो उसका परसेंटेज है, या अलग से जो पिक अप ऑफ द वीक का अलग से पोर्टफोलियो उसका परसेंटेज की बात होती है? ये थोड़ा सा क्लियर नहीं है।
तो इसमें ऐसा रहता था कि अगले आने वाले 1 साल में आप कितना इन्वेस्टमेंट करने वाले हैं हमारे रिकमेंडेड स्टॉक्स में, ये उसका वेटेज है।
अच्छा,
एसबीपी से कोई रिलेशन नहीं है, क्योंकि एसबीपी में हम सारे स्टॉक्स इंक्लूड नहीं करते हैं। जो पिक ऑफ द वीक में सारे स्टॉक्स तो एसबीपी में होते नहीं। तो आने वाले 1 साल में मान लीजिए आप 10 लाख रुपए इन्वेस्ट करना चाहते हैं और हमने आपको रिकमेंडेशन दी कि वेटेज 3% होना चाहिए, यानी कि 30,000 रुपए आप उस स्टॉक में इन्वेस्ट करिए।
ओके
अभी एग्जैक्टली पोर्टफोलियो तो बन नहीं पाता क्योंकि कोई रिकमेंडेशन जल्दी मैच्योर हो जाती है, कुछ थोड़ा लेट होता है, तो एकदम ऐसा पोर्टफोलियो तो नहीं बन पाएगा, बट दिस इज एन इंडिकेटिव वेटेज.
ओके सर, थैंक यू.
Thanks. Okay. With this, we have come to the end. And thank you once again for this wonderful meeting. I hope you enjoyed and got good insights. We will continue at a better frequency in times to come. At least once in a month would be a better would be better for all of us, including me. A good feedback, good sharing from you people. Thank you once again. Thank you.